Welcome to Markets Now. I'm Michelle Rourke with Scott Varilek of Kooima Varilek. And as we start off here on a Friday, we're seeing some pressure over in the livestock. The grains are to the plus side. And Scott, let's talk about the cattle market. We've got some risk aversion going on here in the marketplace in general. Stock market's down here with news that Iran and Israel are fighting. So some uncertainty there, huh?
Yeah, and thanks for having me. And that wins the story of the day. You wake up and it's Iran being bombed by Israel. So something that's unforeseen creates a lot of uncertainty, and our markets go crazy. So all of the markets have that as their lead story. You feel like you might know something, you might have an edge, but there's always that unforeseen paddle that can come in and really whack you. So that's where we're at. I mean, we look at a cattle market that is high, so high that people are already kind of scared to buy it. We've had some news this week that's kept it down, and I feel like this is just an easy correction here. It's like, okay, that's more uncertainty. Stock market's down. Let's pull this market down, and it was overbought. Cattle were just plain and simple overbought. Keeping some people from wanting to buy it. So maybe it just needs that little bit of correction here to try to entice somebody to want to buy back into this market here, because really nothing has overall majorly changed. It's just that little bit of looming uncertainty on some outside markets here.
Do you think that some of the uncertainty this week also came from these ICE raids? Because we were down the last couple of days.
Yep, that started the correction lower here. Was okay, we've got some uncertainty on plant workers, the ICE raids. What is it going to do? Where are they at next? And we've kind of been down this road before. It's not the first time this has happened. So it's not like we're really going to start backing up cattle, when you really want to dive into it, because we're so short of cattle and packers need them, that I feel like we're going to be okay. We're going to get through this, but that was the start of it. Yep, the little bit of weaker trade on that. I think we're going to be able to fight through that okay. I mean, me personally, I'm not long-term worried that that's our big reason that's going to break our cattle from record highs, but it added to the short-term break here this week.
Yeah, and all but the nearby contracts obviously have suffered the last couple of days. Like you said, we've had these breaks before, but we did it in light of higher cash and higher cutout values, though. So I guess that's where we feel maybe it's a little bit more concerning. Is that the right word?
Yeah, and cash got a little lighter. I mean, that's what we've been leaning on. Cash feeders are still red hot. I mean, the prices you hear, they just blow your mind. How much risk we're having to take to try to buy these feeders and put them in a yard. And plenty of producers finally saying, hey, I got to pull back. This is just a little bit crazy. I'm seeing stars here as high as some of these prices are, and rightfully so. But the live cattle cash was slower this week. I mean, we at least saw the renewed 235 in the South. I think that's good news. They led the charge, got some trade there. There was some passing of that bid here over the last couple of days, but I think it's probably picked up some speed with the down, the uncertainty that there is. The North has been pretty quiet. I think you're getting some of those bids, near steady. There was some 380 meat bids. There was some 240 for bids for the last week in June. So not really getting a lot of traction here. I mean, producers are current. They've been selling hard enough to where they don't have to take some of this bids, and they're not wanting to take lower. So producers still have the leverage. Packer really needs the cattle. They've got some for the next few weeks here. They've been trying to get them bought for weeks out. So they're going to sit on their hands as much as they can, but it's been hard for them to keep it that way.
Yeah. You mentioned the feeders, and I think the cash index is at a record level right now, isn't it?
Yeah, every day just been climbing, and it's very strong. It's rare that we have the index June 13 above where the August feeder futures are. Usually we've got this nice premium for August because there's less cattle in that time frame, and things can get a little smoky. But here we are with the index up, a good $7 above where the August futures are. It just kind of testifies how impressive this cash market really is.
Yeah, I want to go back just quick on the ICE raids. I know slaughter figures have been down just a little bit. We're worried about absenteeism, but are we worried at all about backing up cattle at all here? I mean, this is a different situation than when we had COVID, obviously.
Absolutely. I am not. We still have demand that's been on fire. We're in a good situation right now to be able to handle a little bit of slower kill. So you're seeing the numbers pull back a little bit, but I don't think we're in a world of herd. I mean, lately it's been more, I'm trying to dive into these new crop calves that are not fat enough because they make $500 to $700 a head, whatever the number is, and you want to get them gone. So I think we're sitting in a very good spot. These show lists are very manageable, and I think we're going to be able to fight this through and not going to have to back them up.
Good. Okay, the hog market seeing just a little correction, but we made more contract highs in the back months yesterday, so we're kind of due, aren't we?
Yeah, market feels good. We've got some cash, continuing to make some new highs, and that top side of the range of the cash, we're seeing that poke through the 110 there yesterday, and we've got a market that feels okay. We've got some disease that's been a little bit prevalent, and I think the numbers are less. So it still feels good. And we had said here a few weeks ago, we just needed somebody to light the fuse. They finally got that done. And what these producers have been chirping about, the less numbers, are finally showing up here. And I think the funds finally got behind it. We added 100,000 contracts of open interest in just around a month's time frame. So they figured out, got on the band fast, and I still feel like that market has some more room to go yet.
Gotcha. Grains, we're up with soybeans leading the charge and soybean oil, which some of that is tied to the big rally in the crude oil market, but it sounds like we're going to get good news out of EPA on these renewable volume obligations, huh?
Yeah, a lot of news for the soybeans. You know, what has been a boring market to trade some of these grains, we got us a little wild day happening here, and soybean oil leading the charge. Limit up, was limit up on because of these crude oil prices have gotten a lot higher. We've got Iran, Israel in the mix there, so suddenly we have a lot more news on the table than what we had just yesterday, and it's changing things fast. So soy oil limit up. The beans, followed through right after the 8:30 open and took a big shot higher. And here corn sits. Corn just kind of being left in the dust a little bit, even with wheat having a pretty good day today. So getting some movement. Most of it's going to be tied to the turmoil overseas. That's our number one story here for today. But it's a day that we're not talking about weather. We've had favorable weather conditions. Everything's been going, pretty well there. We're talking about hotter, drier conditions coming, but it just hasn't come to fruition yet. And the funds are still a very big short in corn. Also, what's going to shake them? Are they going to move out here now? Is this the news that's going to do it? So, some new things to look at us today here, anyway, Michelle.
Yeah. And I don't want to get in the weeds necessarily on it, but we had so many rumors that were negative on these renewable volume obligations on biofuels that had tanked the soybean oil market. And so, this is really what the driver is for soybeans today, isn't it?
Yep. Limit up. That was right out of the chute here, $3 higher. And that's going to be tied to it. And the beans needed some help. That's what they got going today.
All right. Thanks so much for joining us. Scott Varilek with Kooima Varilek. That is Markets Now.